Today, we're talking about why real estate investing should be your first move after index funds. Index funds are a great start. They're safe, diversified, and low cost. But if you're serious about building wealth, learning about business, and unlocking true financial independence, you need to invest in real estate. We'll break down why real estate is a core asset class, how it teaches you real-world business fundamentals, and why owning property unlocks doors to other ventures, like owning companies, using debt strategically, and building generational wealth. Let's get into it. Index funds are a solid start, but a passive one. Most people start with index funds, and they should. They're passive, they're historically reliable, and they require zero experience to get started. But here's the catch. They don't teach you much. They don't give you any control, and they only work if you contribute steadily for decades. That's great if you want to retire at 65. But what if you want freedom sooner? What if you want to learn how the money system actually works? That's where real estate changes the game. Real estate is the first active asset you should own. Real estate is your first step into real ownership. You're not just buying a share of a company, you're owning something real, something local, something you control. It's physical, cash flowing, tax advantaged, and scalable. But more importantly, it's an asset that teaches you how money works. When you buy your first property, you learn how debt functions in your favor, how to underwrite an investment, how cash flow, equity, and appreciation interact, and how to operate a real asset like a business. You're not just investing, you're becoming a mini CEO. Real estate teaches you business without a classroom. The moment you become a landlord, you become an operator. That means you're managing revenue, rent, you're tracking expenses, utilities, maintenance, taxes, you're forecasting future performance, and you're analyzing risk and return. This is the real-world MBA most people never get. No simulation, no theory, just you, your property, your spreadsheet, and reality. And once you go through that experience once or twice, it's a small jump to buying a laundromat, a car wash, a small business, or even a commercial building. Real estate trains your mind to spot opportunity and inefficiency, which is the heart of entrepreneurship. Real estate trains you to think like an investor. Most people are consumers. Some become savers. A few become investors. But the top 1%, they think like capital allocators. Real estate teaches you that skill fast. You'll start asking, what's the return on my money? Can I improve the NOI, net operating income? Can I refinance this equity into another property? Is this a liability or a cash flowing asset? Once you start thinking like an investor, you see every dollar differently. You stop asking, can I afford it? And start asking, will this produce a return? That shift is everything. Real estate teaches you about debt in a good way. Debt has a bad reputation, but in real estate, it's a tool. When you buy a property with a mortgage, you're using leverage to control a larger asset. You're using someone else's capital to grow your equity, and you're learning how to manage credit responsibly. This teaches you how to structure financing, communicate with lenders, use amortization to your advantage, and monitor your DSCR, debt service coverage ratio. These are the same principles used in private equity, mergers, and business acquisitions. So even if you never buy another house, this experience prepares you to eventually buy companies, not just buildings. Real estate builds confidence with financials. Here's a secret. Most people, even professionals, don't understand financial statements, but real estate makes it unavoidable. You'll learn how to read a P&L statement, project monthly cash flow, estimate CapEx reserves, create a pro forma, set up a balance sheet, and track return metrics. Cash on cash, IRR, ROI. You're not just building equity, you're building financial literacy at a high level. This becomes your foundation for scaling into larger deals, partnerships, and even raising capital down the road. One of the most underrated benefits of owning real estate is how many transferable business skills it teaches you. Let's walk through some of the core skills that real estate helps develop and how they directly apply to entrepreneurship, business ownership, and investing in other asset classes. First, risk analysis. When you underwrite a real estate deal, you're analyzing location, tenant quality, market rent, exit strategy, and worst-case scenarios. That exact skill set transfers when you're doing due diligence on a business acquisition or evaluating a startup investment. Second, asset management. Owning rental property means you're tracking expenses, coordinating repairs, budgeting for capital improvements, and forecasting income. That's the same muscle you'll use when managing a small business or growing a company's operations. Third, using debt strategically. In real estate, you learn how to use mortgages, HELOCs, refinancing, or creative finance. That prepares you for bigger plays like SBA loans, seller financing, or even private debt to acquire companies. Fourth, cash flow management. As a landlord, you're constantly balancing rent inflows and operational outflows. It teaches you to plan for vacancies, set reserves, and optimize for monthly margin. Those habits translate directly into running any cash-generating business. Fifth, team building. Real estate forces you to work with others, contractors, agents, property managers, and lenders. You build communication skills, delegation habits, and accountability systems, all critical for hiring and managing a business team. And sixth, exit strategy thinking. With real estate, you're always considering when to hold, when to sell, when to refinance. That same thinking applies to any business. Should you scale it, exit it, or reinvest in growth? So even if you only own a few properties, the lessons you're learning are setting you up to scale into something much bigger. You're not just building equity, you're building skill sets that last a lifetime. Real estate builds momentum and confidence. Your first property will be the hardest, but once you do it once, you realize it's repeatable. You can refinance and scale, use cash flow to reinvest, build a small team, and grow from 1 to 3 to 5 to 15 doors in 3 to 5 years. This momentum is critical because it builds identity. You stop seeing yourself as a person trying to invest, and you start seeing yourself as an investor and operator. That confidence carries into every area of your life, into your next business venture, your next investment, your next negotiation. Real estate is your springboard to bigger assets. Once you understand how to analyze deals, use leverage, generate monthly income, improve asset performance, and manage operations, you're ready for bigger things. Real estate is often the first real business someone owns, but it's also a gateway to buying small businesses, running real operations, using OPM, other people's money, structuring equity partnerships, launching family offices, and building a scalable wealth machine. It all starts with that first deal. Here's the truth. Index funds will help you retire. Real estate can help you live free, sooner. It teaches you about debt, investing, operations, tax strategy, and financial discipline. It gives you a real, tangible business that produces income, and it sets you up to think like a business owner, not just a consumer. If you're serious about financial freedom, real estate is the first real-world venture that makes you dangerous in the marketplace. Start small, learn fast, grow smart, and build something that lasts. If this helped you, subscribe to The Finance Shark for more tactical wealth building videos. Thanks for listening.